Good day, my name is Ricardo Christian, and I am currently a student at Binus University School of Accounting. I am honored to present our research conducted alongside my esteemed co-authors, Felicia Goenawan, Clarita Felicia Tendy, and Theresia Lesmana, who is the researcher at Binus University. Binus University is also short for Bina Nusantara University, located in Tangerang, Indonesia. We are presenting our work at the International Conference on Management, Business and Economics hosted by the Global Social Science Research here in Jakarta, Indonesia on March 28, 2025. Our research is titled The Influence of Investor Sentiment on the Indonesian Stock Market. And now we would like to begin our presentation. The introduction now. Before investing, investor decisions are influenced by several factors, including information, economic conditions, media coverage, and government policies. These factors can trigger reactions and impact investor sentiments toward the stock market. The statement is backed up by a research performed by Yasser Al-Mansour and Ahmad Arabiat on 2017. This phenomenon occurred during COVID-19, causing stock market fluctuations due to economic uncertainty and policies. Many studies examine investor sentiment's impact on stock returns, mostly in global markets. This research focused on Indonesia to fill the gap and deepen local market understanding. Now we will be discussing the literature review. There are 4 points about the literature review. Number 1, about the foundation of investor sentiment in the stock market. We found that investor sentiment affects stock market and volatility due to emotions. Point 2, the role of investor sentiment in the stock market. Now we find that investor confidence drives stock prices up or down, impacting stock returns and affecting market movements. Number 3, about the contribution to literature and practical implications. We would like to discuss that this study explores investor sentiment's impact on volatility, aiding policymakers and investors. And number 4 is the selection of key variables representing investor sentiment. In our study, we focus on 6 key variables as investor sentiment proxies, which are USD-IDR exchange rate, stock transaction volume, Treasury bills bond or called as bond yield rates. Number 4 is the financial stress index, consumer confidence index, and the last one is gold prices. These variables reflect economic stability, risk perception, and investor confidence in the Indonesian stock market. Now we will discuss about the research data and methodology. Firstly, the data and sources. Our study utilizes quantitative time series data covering monthly observations from 2018 to 2024. Our dependent variable is the Jakarta Composite Index, and the independent variables include exchange rate from USD to Indonesian rupiah, transaction volume, treasury bills or also known as government bond yields, 3 months. Next, we have the financial stress index, the consumer confidence index, and finally, gold prices to Indonesian rupiah. To ensure stationarity, all variables except treasury bills are converted into return values. Now, for the method of testing, first we need to use unit root tests. The Fisher-type augmented decay-Fuller test is applied to ensure stationarity, since some variables, including treasury bills, were not stationary at their original levels. A first difference transformation was applied. The probability value is used to test for stationarity with probability below 0.01 as the threshold for the rejecting the null hypothesis of a unit root. Next, we test with the multicollinearity test. The variance inflation factor is used to check for multicollinearity among independent variables with VIF of below 10 and 1 over VIF above 0.1 is indicating no severe multicollinearity. As a result, no corrective measures are necessary. Next is the heteroscedasticity test. The Bruch-Pagan or Cook-Whiteberg test is used to check for heteroscedasticity. The test returns a probability of 0.5891, meaning the null hypothesis of a data homoscedasticity is accepted at a 10% significant level. Lastly is the autocorrelation test. The Durbin-Watson test was conducted to assess autocorrelation. The test follows a two-way hypothesis to determine whether there's a presence of zero correlation in the model. Now, the data test result of 1.8729 falls within the commonly accepted range of 1.5 to 2.5, indicating there are no strong evidence of an autocorrelation. Lastly, we can now do the regression test. We use ordinary least square linear regression as it can measures the dependent variable well. It measures the impact of investor sentiment on Indonesian stock returns, and only the exchange rate shows a significant negative correlation. While FSI unexpectedly has a positive correlation, other variables are insignificant. Okay, in conclusion, investor sentiment influences stock returns in Indonesia, but its impact is limited. The regression model explains 37.42% of return variation, leaving 62.58% influenced by other factors. Further research should explore additional variables to better understand this relationship. Alternative analytical methods may also improve model accuracy. Thank you all for your time and attention. I hope this presentation was insightful. Thanks again.